Check, check, check. 1, 2, 1, 2. Ha ha. My good sir, GM. So, um, let me start off by reviewing the trade that I got wrong. So on the daily chart here, so okay, on the daily chart here, if you go back to the same one, the old video, you would see that right here. There's a big fair value gap, which I didn't pay attention to. Um, that was on me. I didn't do my due diligence. So yeah, I'll pay a price for not doing my due diligence. So that's just what it is. Um, so that specific day, assuming that I would have seen that, um, I would not have interpreted this break in swing high to be a run on liquidity to the downside, because as I could see earlier in the week, um, when we were actually bearish, every time price took out a hourly high, price took out this high, bearish move. Price took out this high, bearish move. So it happened twice. Well, it happened earlier in the week, Tuesday, Monday. So um, that recency bias messed with me, and then my lack of due diligence. So all that being said, let's assume our perspective shifts slightly and we were bullish because price just filled this fair value gap on the daily. So we bullish here, breaking market structure right here. This is a shifting structure. So we have our bias based on the hourly and daily. Shifting structure and the setup is the same. H1 will be 5-minute liquidity. Simple as that. And let me use the replay button. 6 to 7, 7 to 8, 8 to 9. So this is the candle on the hourly we would have been seeing. So here, this here would have been our order block. Could use this one, or we could use this one. I like this one, mainly because it has a thicker body. So setup remains the same. We're looking for 5-minute liquidity to be taken at, well, between 9:30 and 11, but most times it's literally at the beginning of the 9:30 open. So right, this would have been the price action we see. 9:25 candle closes at 9:30. So this would have been the price action we see at 9:30 a.m. exact. So we have the H1OB 5-minute liquidity. That's it. That's the trade right there. You go down to the 1 minute and do the fair value gap entry, but I just like to take it immediately at the low. Stop loss right above another swing low, so it could go below this one or this one. I like this one, 6 pips. And then you target the same liquidity that I targeted. It's just liquidity to liquidity, premium to discount. That's all price does. So yeah, you could target 2 to 1. Take out this high. Didn't even reach this equal high here yet. You know, we have this liquidity here that I was planning on selling at. I sold at this liquidity. So what I also should have paid attention to was the fact that price took out this liquidity, because once price took out this liquidity, I should have known that. Well, not I should have known that. Once price takes out this liquidity, automatically you will expect it to take out liquidity on this side. So I would have definitely shifted gears if I had seen that, but I was not the chart. Just adding that, so with the setup, if the opposing liquidity is already taken, so let's say you were trying to sell here above these equal highs, once this liquidity get taken, you have to reevaluate it because the liquidity was already taken, you know. But yeah, that's the setup, bro. You just wait. Right, you can see here So you're just looking at 5-minute swing lows to be formed. You can see right here on this candle, he had another 5-minute swing low form here. So we looked at this low for no specific reason, just another swing low formed. So you look at that low instead. So now your stop loss would have been here, looking for the same shit. 10 to 12 handles, and it could be done for the week. Right? See, price came down here. You can go down to the 1 minute and get a nice fair value gap entry that ICT does teach. And I ended up selling here. I sold like right above here. Could have possibly gotten, well, it did run for 5 handles. It did run for about 5 handles. So you can see that the system, if you're just looking for 5 handles, you could always kind of eat something. So yeah, that's the setup there, bro. You can see that if you wanted the 2022 mentorship setup, liquidity take on, swing high taken out, you look for the fair value gap. So there's a nice gap in here. You could have taken on an entry there as well. So yeah, I'm gonna just go to other days in the week. Tuesday, Wednesday, Tuesday. Let's just forward test Tuesday, Wednesday, Tuesday based on the, well, back test. Tuesday, Wednesday, Tuesday. Monday, Tuesday. Alright. So we would have been bearish based on the higher time frames. Let's go to the daily. So this was Monday's close. See, price hit the fair value gap earlier in the week, but price was taking out daily lows. So price took out this daily low. We have this order block here on the daily that price respected. So we can safely expect a bearish day on Tuesday. Well, there's a higher probability of a bearish day on Tuesday because Monday hit the daily OB. Alright, so this is 8 to 9. So we bearish, even though you don't need a bias, as you would see here. You don't really need a bias. So premium discount. Alright, so we know discount here, you have this discount. So what you can do is label just all the order blocks premium discount. This OB here. Alright, that's the mean threshold right there. And then you have this order block here, which is a premium order block. You could use this one. Could use this one, of course, but this one here in more of a premium. So probably just opt for that one. See, price left this order block here. This could also be considered an order block. Alright, in a premium. So you go down to the 5 minutes and you just look for liquidity, bro. That's it, fam. That's it. You just look for liquidity in your zones, because this is a zone here, swing low. This is a zone here, swing high, swing high. And that's the setup, bro. You can literally set and forget both ways if you want. If you really want to just be a kind of not care about the outcome. So you're literally just following rules, setting and forgetting and letting probabilities do its thing. You could do that. Set limit orders both ways. One of them had to work. Boom. I know there's a big rambies, but you know, I get carried away in the charts. Right, immediately at 9:30 a.m. price hit this liquidity low. You can see how algorithmic it is. You go down to the 1 minute and get your 2022 mentorship setup. Gap here. Price fill the gap. So you could enter on the liquidity run itself, which is a riskier entry, or you could enter on the 1 minute gap. And obviously you could get 10, obviously you could get 5 handles, but let's assume you're doing 2 to 1 only. Alright. Price would have come back down in here. Fair value gap, still respected it, still respected it. Still respected the gap. Probably would have get stopped out here. That's why I do like the 2022 mentorship setup. The fair value gaps is just too high for me. Oh shit. So you probably would have lost if you took the, if you were looking for 2 to 1. If you were looking for 5 handles, you would have been out. But as you can see, price respected the liquidity twice. So you see it hit it once here, 9:30, then it hit it one more time here, 10:52, which constitutes another trade based on the rules, because this is 9:30 to 11. So you would have gotten your nice little 2 to 1. You dig? You probably put 5 handles, stop 10 handle TP kind of thing, whatever you want to do. But the liquidity, bro, is respected. I just draw that line out. You see it respected twice, came back to it, shoot to the upside, and it didn't touch it at 11. So this liquidity run didn't happen at 11 a.m. But let's assume you were bearish. So all you were looking for is bearish plays. You didn't want to take any buys here. You would have had to wait until PM session. But PM session is the same thing. So 12 to 1. PM session is around 1:30. You have your order block here. Same liquidity that I marked out. Alright. So right before PM session, remember I was telling you that most times the play does happen immediately. Like it's happened at 9:30 or like 9:25 or around 10. Between 9:30 and 10, you can see something nice. So this would be the last candle we see at the open. You have this liquidity here that already took, but let's assume you look at this liquidity here, this swing high here, this new swing high that formed here. That's you right there, bro. Enter that bad boy. You get me. You get me. 6 for 12 or 6 for 12 once a week. Yeah, dig. There's a little swing low here you can target. Nice 2 to 1 poppy. Nice 2 to 1 poppy trade. 2 to 1 poppy to call it, man. 9:30 a.m. poppy to call it, man. This is a nice liquidity low. See these equal lows here. Nice liquidity run. Boom. Price. Fill your order. Taking out liquidity. Boom. Hit liquidity one more time for you. One more time for your money. And then he run. That is all she wrote. You think? So AM session, PM session, same rules. So that was Tuesday. Wednesday, you're bearish still. Right? But I remember this day there was no H1 order block. But if you're interested in doing this type of plays, which is liquidity, which is what ICT was talking about, last one I'm gonna show you. This video again kind of long. So you have label your premium on discount. Swing low to swing high. Premium discount. Now, little magic here, right? You could have counted this order block here on display, right? I'm gonna clear up this chart a little bit for you. right? So this is a breaker here. I know you know what a breaker is. The last down candle before price take out the high, then it creates a fair value gap where the um, order block is. But I'm not confuse you with that too much. But on Tuesday here, the order block with the highest close, this was it. This was the order block with the highest close. So that's what it respected on Tuesday as well. But and it also respected it here on Wednesday at New York. Um, Same way as extend fair value gaps, you could extend for order blocks. So on this play, I didn't get any play on this one. Based on the rules, this would have been my order block here. Price never came back to it. So based on my rules, I would not get this play. Let's assume you label this order block here and look for liquidity run. Look for liquidity run at 9:30 a.m. All right. You'd have definitely been stopped out. However, this is what ICT was talking about with liquidity. So he had a video he did years ago. I could send it to you if you want. What would I do if what would I do if I restart as a 20-year-old trader or some shit like that? And he talk about hourly highs and lows. You don't need any bias. You just mark out hourly highs and lows. Once price hit that, you go down to a lower time frame and you look for a setup. So you label your hourly high or low, and you can either use this last down candle as an order block once the high get taken out. So it's the same order block theory, or you could just do the 2022 mentorship setup, which is liquidity run, price run out, take out this swing high right here, and you look for the gap. You enter on the gap, and you're out. So that's kind of two setups I'll show you. Don't want to confuse you, but that's really the only two things prices do: take out liquidity or fill fair value. Fair value. An order block is just another form of fair value. Here at PM session, you had a play. A play that aligns with the rule-based system, of course. So swing high to swing low, premium to discount. Right, so this would have been your order block in a premium. Right, you have a gap here too, as you can see. Probably see it already. Nice little gap in here as well, if you wanted to label that in premium. And then you just go to the 5mg. Just go to the 5m. That's that. Go to the 5m, look for liquidity. It's that temple. Nice little thing right here. Alright. Nice little swing high there. Right there. It's three of them, so definitely a liquidity. You could do this one too. You could look for that one too, but I like that one right there. That's just me. It's three, so you're sure to get a little price run away from it. 6 handle stop, 12 handle TP. Call it a week. Filled right on time at the ending of the session. Price make one more run. It would have been filled. Let's see if it would have been stopped out. Probably, maybe, depending on the spread. But as you can see, what they did was they just went for this liquidity. So it's still the same liquidity thing. You could have taken this one, but it wouldn't have been filled at the correct time. Also, to show you our next play within this play here, is that once the high of this candle is taken out, it becomes an order block. right? The high get taken out here. Actually, nah, fuck that. I'm a little confused here. That is it, bro. H1 will be 5 minute liquidity. That's the game. Time and price, do it at AM session or PM session, as long as it's in line with the higher time frame bias. Peace.